Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So as usual, we have prepared the fundamental report today on the forex market. In particular speaking, we have taken an in-depth view on the CPI numbers that have been released recently, because it's lots of really arguing around the recent numbers. One analysis tells that actually we have the deflation if we exclude the shelter component from the inflation data. Others are pointing on the core inflation, which actually we're also agree with that this is more reliable indicator, but also we are not taking into consideration a few other moments. First of all, we see that here might be some political moments in recent numbers. You will see what particular we're meaning if you already report. Second, we should not just to stay focused only on the CPI number, so we can't judge on economic condition based on just single indicator and only based on the single number. And we're just have integrated the recent CPI number is in a bit broader picture, where you see that lots of mismatches between the different data that absolutely do not agree with the idea of the economy turning to the growth. So we absolutely do not agree that this is happening right now, and where stands far from the idea that well, inflation is defeated and we're coming to the reversal. It's absolutely not, because if you take a look at the sentiment analysis, PMIs, if you take a look at the job market, by the way, you will see that they are showing figures that absolutely do not rely to the normal healthy growth conditions in the economy. And if this is just temporal psychological reaction, this is one story. But if this is some mistake that market is doing right now, this is quite another. And the latter could lead to the painful hurt when the Fed will keep standing on its policy, and the coming statistics will just confirm what we are talking about. And it means that the collapse on the euro currency might be stronger if market will keep going higher. So we think that report really interesting, and it's definitely worth it to read it. Besides, I have tried to keep it as short as possible because recent reports were relatively extended, and this time we're just focused on this subject, the CPI numbers, and trying to keep it focused and to not touch some other important moments. So on the technical side, recent momentum and inspiration of the investors, and together with well, some room and time space until the Fed meeting, which will be only on the 1st of February, let's market to keep riding on the existing sentiment. Since market currently is broken through the 107.50 weekly resistance, and market is not at overbought, not on a weekly, on monthly, and even on the daily chart, this potentially creates the background for a possible further upward action on the euro currency if, of course, we will not get some distracting statistics on the next weeks. For example, personally, I'm waiting for PPI numbers that could really shed some light on the reliability of the recent CPI. So, because you know the PPI stands a bit ahead of the CPI. That's first moment. If everything will go in the same trend, then euro currency could keep going higher, and we do not exclude if it will try to touch the 110, 110.50, which is next strong weekly resistance, monthly resistance area. On the daily chart, in the beginning of the week, we're considering a few scenarios. First of all, we're dropping out all levels that stand below the daily oversold because we do not need them. This we are treating as a floor of the possible performance on the next weeks around 105 area. Hence, we're considering only these two levels, 107.20, 106.30, and maybe 105. It's just because possible pattern here might be formed. So if also market is coming to be tested by the next resistance area of 109. This is 1618 extension of this most recent swing. Why this extension might be interesting? It's just because 1618 is the typical extension for the hand and shoulders. And if market will show some more extended pullback, or by some other reasons maybe, this could be hand and shoulders to be formed. From that standpoint, we have to be careful to this level, 107.20. Why it's important? Because currently, market, as it stands just few pips from the OP target, it should not show very deep pullbacks. This is first reason. Second, 107.20 actually stands very close to the broken weekly confidence area. And it will be better for a bullish market if it will just retest it, but will not return right back down below it. Downside return and breakout 107.20 area will increase chances on a deeper retracement on the euro. It might be really some kind of the hand shoulders, and we will have to consider some different scenarios. That's why in the beginning of the week we're keeping an eye on the 107.20 area. So one of the possible scenarios that we're intent to consider is the touching of the 107 and upward continuation. This is what the normal bullish market should do and try to do in the current circumstances. Downside breakout will open road for different scenarios which will be covered in the following daily videos. On Monday, let's focus on this level. So on intraday charts, we have extensions to the downside. As you can see, this ABCD pattern with the OP around 107.50 and XOP 106.97 right there. So both of them are standing around 107.20 area, slightly higher and slightly low. So in general, this is acceptable. And now if you'll take a look at the XOP, actually XOP, it's 107, is very close to the 50% retracement of this most recent leg up. So maybe XOP will be touched. So that's a strategy that we intend to follow on Monday, and then we will see. So if market indeed will show this minor pullback to the XOP 107 area, return rate and starting upward action, it means that we're probably going higher first to the 109.70 area, so where is the OP stand in daily lever. But if it will break it down, we start considering some alternative scenarios. So one of them might be the hand and shoulders and deeper kind of the ABCD retracement right there. So that's in two words that we have on euro currency.